I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned in to Traders Nation. Thanks for making us a part of your day, Don. I got a jam-packed show. Sam McElroy, he's back with us here today. He's co-founder of At Financial and At Financial Investments. So we're going to be talking with Sam about consumer confidence and the labor market sentiment approaches its record high. All right, so what's going on there? We're going to be talking with Sam about that. Plus, Don and I are focused on our payment processors here today and also our towers. What's going on in the payment processes? You got to be scratching your head and wondering in that sector. We're going to give you the 411 on that, plus a whole lot more. So we got gas, stocks, and a whole lot more right here on Traders Nation.
Traders Nation. If you promise not to tune out, we promise not to talk about you while you're gone. Traders Nation. Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation. Delivering what you want when you want it. Traders Nation. Traders Nation. Live.
It's on the whole time.
Bringing traders coverage of the markets, solid trading strategies, potential hot stock movers, world-class guests, informative callers, and unsurpassed market chatter for traders to take all the way to the bank.
You guys got some great stuff coming out. I mean, the great station.
Stay on top.
This is always changing. It's always fresh. Something new.
Stay tuned in. Traders Nation.
It's always something to look forward to.
Clearly, you can hear the difference. Traders Nation. It's the Traders Nation Network.
I'm Steve Forbes. You're watching Traders Nation.
Yeah. Welcome back. You are tuned in to Traders Nation. Our pleasure to have you with us here today, Don, right? Certainly, we appreciate everyone watching, tuning in, listening, wherever you may be, whether it's our YouTube channel or syndicated channels, iTunes, wherever. I mean, we're literally out there in a lot of different places, Don. So, hey, Don, so what's going on here today? We got payment processors still rolling over here, Don, trying to recover from like about a week ago. One of them gapped down, but certainly trying to recover here today. Some profit taking going on, breaking through some moving averages, stuff like that. We'll get into the technical analysis of that, Don. But overall market feeling, what are your thoughts here, Don?
Well, take a look. They're actually coming back. As I mentioned before we got started, 1,400 stocks are up, about 1,600 are down for the day. We're off our lows of the day.
Yeah, all right.
But if we take a look at the Square,
yeah,
the stock is down $1.55 today. They're all getting beat up. But the Square made an announcement earlier today or late yesterday that they're tuning up with Postmates, the food delivery company, and they're going to be offering deliveries to small business people.
Sure.
So that goes to show what's going on with the technology these days.
Yeah.
But the stock, once again, is down on the day. And look, I'm big on Square. I think Square is going to be around a long time before somebody acquires them.
I see. Square currently trading at $65.57. 3.5 million shares exchanging hands here today on it. Gap down early last week, like I mentioned previously, and it continues to suffer here today. It really is. It's below its 21-day moving average, 50-day moving average, 200-day moving average, okay? And I'm not going to say that it's going to go here, but the potential support level on this is 55.80. Okay, even if it may even go that far, Don. I don't know at this point because technically there's nothing holding it up until that level. All right, so we don't know if buying's going to come in and reverse this thing around. We just don't know that. But technical analysis indicates that support level's down there at 55.80, Don.
Well, it's a great business to be in, the pay processors, and you're right.
Yeah.
The stock could go down another $10.
Yeah.
Which
right.
is frightening for some people. But if you have any shekels laying around, then perhaps you should be adding to your position. So not a bad idea to be taking a good hard look. But right now, with the insecurities going on with the trade barriers with China, we have a market that's extremely volatile. And it's showing itself today as we're down Well, we were down about 420 points. Right now, we're about down 375.
All
so
right. Improving a little bit, Don. Improving a little bit.
Yes.
So again, bring your charts up on Square. You decide where that support level is going to be. Use your own technical analysis. That's where I'm finding it. Okay. PayPal's coming up here next. PYPL, Don, that's on our list, currently at 108.38. 1.5 million shares exchanging hands here today. Continuous rollover, just like Square, broke past its 21-day moving average to the downside. Trading right here, right above its 50-day moving average, and that 50-day is around 105-ish, Don. Okay.
Well, PayPal, digital wallet company, and this is the spinoff of eBay years ago.
Sure.
And this is another one. Actually, it's only down 28 cents today.
Not bad.
So the stock is holding up. And you mentioned all these stocks have the same chart patterns for the most part.
Yeah.
Where they could reach their 20. What did you say? You're talking about the 21-day.
Yeah, the 21-day moving average is down from that, and certainly trading right there as 50-day. And nonetheless, I mean, we got what we do when these stocks start to roll over, folks, is we say, okay, well, where's that support? Why, Don? Because we want to. We want to buy on the low, right? We want to maybe pick some up on the low. So we start looking at, well, where's the support and potential pivot area? And this is why we still talk about them. We don't talk about them as they're going up only. We talk about them as they're rolling over, just like these, and they are. At some point, they will become a buy again, and that's why we talk about it, to watch it. PayPal, PYPL, done. Nonetheless, Visa, okay, Legacy payment processor, ticker symbol V on this one, $162.41 right now, done. Just like PayPal continues its rollover, broke past its 21-day moving average to the downside, trading right there at that 50-day moving average. Trading above that 50-day moving average, which, again, that support level is around 156, currently at 162. Don, Visa.
Well, Visa, just take a look at the 52-week high, not only on Visa, but PayPal as well. They're not that far off their 52-week high. So on these down days, with this volatility that's been in the markets now over the past week or so, they're not down all that much. But certainly today it'll make some investors nervous as stock is down almost $3. But the charts could go down a little bit more from here. But this is another one where you want to be adding to your positions. As it comes down.
That's right. And let's talk about that real quickly, because the market's down bigly today. It really is. And certainly that sidelines some investors or traders because they just simply don't have that steel stomach. And honestly, I don't blame them, right? So this is where you got to pick and choose some of your plays, especially if you're a swing trader or day trader, right, Don?
Volatility is not for the faint of heart. We certainly have these volatile markets. And quite frankly, this is one of the reasons why we've selected some of these sectors that we follow.
Yeah.
Because overall in the markets, they're not that volatile.
Yeah. All right. So nonetheless, in fact, we're going to come up. We've got on our list as another sector right after MasterCard. We're going to talk about that volatility and how those are holding up here on the list. MasterCard, 241.86 here on our list here today. Just like PayPal and Visa continues its rollover. It broke past its 21-day moving average to the downside. And currently trading at 241, all right? Next level down is that 50-day moving average. That's around 237 on MasterCard, MA.
MasterCard, MasterCard and Visa is the leaders in the trade.
Yeah.
MasterCard is also being hit today. There was a little bit of news out earlier where they're taking a look at capping interest on credit card charges, and that has trimmed it a little bit back.
Sure.
I don't understand the whole play there because MasterCard really is a licensee of their brand on the credit cards. But we'll have to dig further into that. But look, this is another one, not unusual for a high-tech, high-price stock to be down to $3, $4.
Okay.
And certainly we're seeing that today as the markets bounce off their lows and we come back somewhat here at the noon hour here in New York.
Okay, let's talk about some volatility, the volatility in the market and stocks that are holding up. And that, of course, that's going to be our towers list, Don. Shouldn't be a surprise. Anybody that's been watching Traders Nation for some time or listening to it's going to know that towers are going to be one of our favorites in good times and bad, and certainly today's a proof of that. AMT, American Tower, currently trading at $190.66 here today. Some sideways action for the last several weeks on this one with a slight bias towards the downside, but that's okay. Not a big bias at all, just slightly to the downside. Trading below its 21-day moving average, but right there at its 50-day. Don, your thoughts on AMT?
Well, speaking of volatility, AMT, American Tower, the stock is green. It's up 6 cents, and the 52-week high on the stock is 198. So on these down days over the past week or two, it's come down all of $7. Not bad with this kind of volatility, but there's a reason. These are REITs, real estate investment trusts. They pay a dividend. They're in great, solid businesses. These tower companies are the companies that carry the traffic, and AMT, very big worldwide, and they're getting ready to roll out even more in India.
Sure.
So AMT is one in this sector you got to keep an eye on. And as we've also pointed out in this sector, it's a tough barrier of entry for anybody that wants to compete.
Totally. All right. So towers, if you're listening, you'll get it on solid footing, Don. Towers.
That's correct.
That's right. AMT, CCI coming up next. Crown Castle International currently trading at 123.59. 304,000 shares exchange in hands here today. Recovering from its drop after that earnings recently, trading below its 50-day and 21-day moving average, okay, which are converging at this point. So nonetheless, we got one more tower, and it's the best one on our list, but we're not going to get to it right now. Why? Because we got Sam McElroy coming up. We'll get to it on the other side. You're not going to want to miss that. This one is green as green can be. Sam McElroy next. Stay tuned.
Traders Nation salutes America. Stay strong, stay proud, and stay in the green with us. Traders Nation live, bold, and packed for profit every weekday morning.
Traders Nation live, bold, and packed for profit. Sign up today for our weekly HTML newsletter and check out the Traders Nation store for products to enhance your stock trading day. Traders Nation, what you want, when you want it. Traders Nation.
Hey, Jeff Carlisi here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuning in to Traders Nation. My pleasure. Have back with us once again, Sam McElroy, co-founder of @Financial and @Financial Investments. Sam, welcome back to Traders Nation. How are you today?
I'm doing well. How are you?
Doing real good, thanks. Topic today, well, we're going to be looking at consumer confidence. It spiked as the labor market sentiment approaches record high. What's going on here?
Yeah, I think there's a couple of things that have been happening, one of which is that job numbers, unemployment numbers are still looking good. And as we all know, a number of economic data, including GDP, was higher than what was forecasted.
Sure.
And I think that really created an uptick in terms of consumer sentiment. It dropped a little bit in January of this year. I think that's to be expected after the December that we had.
Sure.
And then it started creeping back up. It dropped a little bit in March, and then we saw in April that it ticked back up again.
Right. So there's a couple estimates that look at those conditions, and certainly one is the present situation index and the expectations index. Both of these are really kind of marching north of here. It certainly tags on to what you're saying here today, right?
Yeah, I think it really does.
Yeah.
I think that there's a lot of information out there, and if you look at a couple other indices, whether it's the Consumer Confidence Index from the Conference Board, or I know University of Michigan kind of has like a survey that they do about that as well. They're all kind of saying the same thing in terms of this overall trend and pattern that we're seeing.
Yeah, so jobs are plentiful at this point. In fact, we got more jobs than we got people to fill them. Certainly shores up that consumer confidence, doesn't it?
Yeah, I think it does.
Okay.
I find that it's really interesting because when you're talking about consumer confidence, a lot of it is based off of just people's perceptions and things that are happening as well as economic data.
Sure.
So I think that, there's a number of different pieces that can really bleed into that in a sense.
Sure. So let's touch even further on that. So you're right that there's this static that's in the air. people know, for the most part, know that there's more jobs than there are people to fill. People see spending. People, other than today, the stock market for the most part is doing pretty good. They're seeing some of that rebound in the 401ks happening. So there is this kind of good vibe that's really kind of going around. Businesses have that good vibe. They're confident too, aren't they? Because let's face it, I mean, for the longest period of time, they had that fear of taxation and regulation being run out of business for that. And so that positive vibe's there to grow. So consumers are kind of feeling it all the way around, aren't they, Sam?
To some degree, yeah. But I'm always, I shouldn't say always, but right now, I would say that I appreciate the jobs numbers and the stuff that we've had, but I'm also a little bit skeptical. There's some things that I'm continuing to watch that I think could be, really meaningful and salient. Some of this is quantitative and some of it is qualitative. We have a tendency to consult with and talk with a lot of individuals, and I got to say, especially last year, and I'm still seeing the trend this year, I'm seeing a lot of business reorganization. I'm seeing a lot of senior people that are telling me that entire divisions are being dismantled. So while I think the job numbers are really good, I think that there's some underlying currents I'm still seeing from a business standpoint. I'm still seeing a lot of businesses doing stock buybacks and other things like that.
Sure.
So I don't want to paint this picture that everything is now perfect, nothing can go wrong, and we can all ride off into the sunset.
Right.
Because there's a lot of question marks that are still out there. If the job market is so great, why is average wages not really incrementally increasing faster? Why are we not seeing inflation faster? So there's a lot of things that I think we just want to make sure that we're not kind of getting caught up in this whirlwind of look how great things are, and that we're keeping a finger on reality at the same time.
I see. So inflation's a little bit low, and folks are seeing a little bit more in their paychecks, though, from the tax cuts, et cetera. Maybe even the raises and certainly the bonuses that the businesses are sending that down. But I want to focus. So you said something about business reorganization. What are they reorganizing? For instance, are they shedding some of that old divisions that just aren't up to date? They're still sitting at 1.0, or is it something different on the reorgs? Your thoughts?
I'm seeing a little bit of everything.
Yeah.
But really, at the end of the day, and we have to be careful how much we interpret into this, because businesses should always be looking to maximize profits, which means that they should always be looking to only have the overhead or expenses that's necessary for them to achieve the profits or revenue that they're going for.
Yeah.
So we can't look at them reorganizing and say, well, it's all fear-based. Yeah. But in a sense, what I really see happening is businesses trying to find ways to cut the bottom line.
Okay.
I see a lot of strategic moves being made in preparation for things that could happen in the future so that they're more resilient if economic conditions do start to shift.
Well, that makes perfect sense to me, and I'm down for that because let's face it. So let's say the economy turns for the worse, and these companies are set up, right? They're proactive in being set up to be able to wave the weather if an economy were to turn against them. But if it doesn't, I mean, it's no harm, no foul, right?
Yeah. In a sense, it's no harm, no foul, because assuming that it was something that was necessary in order for them to be more streamlined or more effective, then they should be doing that irregardless of what they see happening. Yeah. I think sometimes when you see a number of businesses looking not necessarily at ways just to maximize revenue, meaning that they don't necessarily see a strategic opportunity to increase the top line, and they're really starting now to shuffle the things to change the expense line, to me, sometimes that's just a little bit telling of where they see the economy going and where they see their growth potential going and where they see their spending power going in terms of the impact they can have in the economy.
Sure, and I'm thinking also, too, businesses are smart to the fact that employees, since, the job market is thin out there, it's hard to find really good people at this point. It's to the benefit of the employee. This is their bargaining chip now. The markets have turned, the tables have turned and the market has towards their favor. Would you agree?
Yeah, in a sense, yes. Okay. But I'd also say for a number of people who I know have been laid off recently, it has not been that easy for them to find employment. And this kind of goes into another direction.
Sure.
But I'm seeing a lot of people, especially in a certain age group, that are finding it hard to actually maintain their positions in the labor force right now.
That's interesting. Probably 50 and over, I'm guessing.
That's right.
Yeah, it's totally. The overall economy grew 3.2%. We're almost out of time, and I want to get to this in the last quarter. Do you think some more growth coming? Hopefully? As long as the feds don't get in the way?
I'm concerned how to say this because in a sense, in my heart of hearts, no, I don't.
Okay.
I think that we may see a little bit more continuing on this uptick, and I don't want to say that we're going in the toilet. The problem is, if we define a recession as contracting 2 quarters, sequentially, then it's hard to maintain that 3.2 consecutively. So even if we go from 3.2 to 2.9 and 2.7, technically we're in a recession. And I think that that's kind of where one of my concerns is starting to emerge.
Yeah, interesting. So since we've mentioned feds, and we got just a micro minute, if the feds leave rates alone, will this mean that we're going to see a white flame in regards to the economy going forward then?
I think that it could spur us forward. The problem is I think the Fed is playing a lot of different games. So, yes, they're saying that they're going to leave rates alone, but at the same time, they said they're going to stop unraveling quantitative easing. And that can have the same impact in terms of flattening the yield curve or inverting it like we saw earlier in the year.
Right. And if the flattening continues, what kind of problems we got?
Well, that's major problems because banks make their money on the spread between short-term rates that they borrow at and long-term rates that they rent out. So literally, the Fed may create a recession because if there's no incentive for banks to want to lend money and they start tightening their underwriting, they can stall the economy.
No good for us. Where can we find you, Sam? You got a website?
Yeah, best place to find us is on our website, www.atfinancial.com.
All right, atfinancial.com, atfinancial.com. Head on over there today. Sam, thanks for your time today. Appreciate it as always.
Yeah, my pleasure.
You bet. All right, stay tuned. We'll be right back. Hey there now. Welcome back. You are tuned into Traders Nation. All right. As always, hey, Don, so before Sam came on, we were talking about towers, and there's one particular tower stock that's really doing well here today, has been doing well for quite some time, and hopefully folks are paying attention, Don. I'm talking about SBAC. Don, your thoughts?
Well, there it is. This is a mainly North American company, but they're very active in South America as well. Been around a long time. Once again, a tough barrier of entry in this business, and the stock is trading around 206.5 today. Down $1.50. Not far. 52-week high on this bad boy is 208.60. So down in this volatile market over the past week or two. Down a couple of bucks, no big thing for this one. And all these stocks pay a very, very nice dividend.
They totally do.
And, of course, once again, the barrier of entry is right there.
SBAC, 206.50, best of the lot here today, trading sideways. And this one actually has a bias slightly to the upside, Don. Bring your charts up on this, folks.
And by the way, getting back to AMT and CCI, both those stocks now are up on the day. So you got a market that's down over $350 right now. And those two stocks are positive. CCI, AMT, SBAC. If you're out there, keep an eye on these stocks.
Love it. Don, do you own anything we talked about here today?
No.
I don't either. These are not buy or sell recommendations. We absolutely appreciate you tuning in today, making us a part of your day. We'll see you on the next edition of Traders Nation. Have a great day.